Important market voice today. Nilesh Shah, MD and CEO of Kotak Mahindra AMC, joins us right now on the show. Nilesh, so good having you. Thanks much for taking the time out. Please dissect this situation for us. How do you view what's happening across the world and India, economy and markets?
Neeraj, this is unprecedented time. None of us have the experience of managing situation in an epidemic. And that is true probably for rest of the world also. 2008 experience was about tackling a financial crisis. 2020 is medical plus financial crisis. Unless we find a medical solution for current situation, the steps taken to manage financial crisis won't be effective. Markets won't get the confidence or the comfort. And just to give you a small example how confused market today is, you talked about that there's no stock in the green today. Now, on a normal day, when you would have opened, at least one stock would have been green, where they have got permission from US FDA to manufacture a particular ingredient, which might be handy for tackling current crisis. Such company should have been in the green on a normal day. But if that is not true today, it shows how clouded markets thinking is. It's thinking of fear, thinking of uncertainty.
Nilesh, sorry, just to clarify, what we meant was none of the stocks in the Nifty 50. The company that you're talking about is indeed in the green.
Perfect. Then at least there is some sanity in the market.
But please continue.
No, good you pointed that out. So at least we can hope and pray. But in a simple summary, we need a medical solution first, before which a financial solution can emerge, and before which markets won't recover.
Nilesh, okay, then my second question is this. We don't know how far the medical solution is. Financial markets, typically in whatever limited experience I have, and probably in your experience as well, at times tend to price in events much before they do. This is an unprecedented event, yes. My question to you is it possible to try and second guess whether financial markets at the current stage are pricing in a lot of the impact of the coronavirus, I don't think, there's somebody who pointed this out, Nilesh, that how do you assess the impact of cities and countries being locked down? There is no historical template for such a thing.
Undoubtedly, all of us are grappling in the dark, but China at least provided some example. They did witness the massive lockdown in their cities and in their country. Their GDP growth is expected to come down from plus 2.5% for March 20 quarter to about minus 9%. Now, these are all preliminary estimates and things can change, but by and large, that is the number it's been talked about. That's a swing of about minus 11.5% in quarterly GDP growth. Now, this will vary country to country and region to region, but if we take that as a thumb rule, the annualized impact of GDP slowdown could be roughly about 2.5 to 3%, without taking into account corrective measures taken by the government and central bank. Now, on the other hand, in US, again, very wild estimates, but someone is talking about 30% drop in second quarter GDP. Now, is that a real number? Answer is no, because it has not come from a credible research house. It's just an off-the-cuff remark. But markets are obviously trying to discount today the most negative aspect, because there's no certainty about when the medical cure will be available. And there's no point in guessing where the bottom is unless until we find a medical solution.
Nilesh, good morning. Devina here. For India, what's your biggest worry in these times?
Clearly, our biggest worry today is both life as well as livelihood. Yesterday, we gave a splendid account of Janta curfew, but we need to maintain the discipline over coming days. Just one, wrong move by a single individual could create massive implication. In South Korea, we heard about patient number 31 who went to religious gathering, who went to various places, and in turn ended up impacting more than 60% of current patients in South Korea. So this is a battle where we can't afford to miss one person also. And first we have to focus on lives, and then we'll focus on livelihood. There's a kahavat which says, "Jaan hai to jahan hai." I think this is the time where we have to implement it.
Right, right, and these are extremely dire times, and the human grit needs to be tested in these times. Aside from that, Nilesh, I just want to talk about what the rest of the world is doing versus what India is doing in terms of creating a war chest to fight this battle. You've got the rest of the globe announcing various kinds of stimulus packages to make sure that they're able to tackle the economic slowdown, make sure that they're able to put enough money in the hands of the spender, make sure that supply chains don't get cut. We're not really hearing anything concrete on those lines, at least from the Indian government. Does that bother you?
So what we have heard from RBI, that they will use appropriate tools to manage the reaction against coronavirus. They have done open market operation of 10,000 crore and announced for 30,000 crore more. Obviously, market is expecting much more. Second, they also talked about interest rate cut being on the table at the MPC meet. Market is expecting big move prior to MPC meet. Similarly, in terms of government, we have central government as well as state government, and we have started seeing some measures being taken by the state governments. My presumption is that even the central government will be working on the package as we speak, and they'll have to probably focus on multiple things: banking sector, NPAs, consumption continuity, protecting the bottom end of the society. So we are going to see multiple actions at various levels. One can say that they should have done it early, they should have done it later. But my guess is that in India, collecting data and creating responses will take a little bit of time. Probably this is also driven by the fact that at least till few days back, we were relatively insulated against coronavirus. When we spoke with a large cement company, large steel company, there was business as usual till about 6 or 5 days back. Now we have started hearing automobile companies shutting their plants, cement companies shutting their plants. So clearly now the urgency for taking action has increased.
All right, Bajaj Finance is down 15%. It is the worst performing stock on the index right now. Trades at 2,500, just about on the brink of breaching that on the downside. Nilesh, these, not to get stock specific, but there were a handful of companies that were considered those bellwether stocks that you would buy at any price, and it was probably worth it. And that seems to be turning on its head right now. What should and from a retail investor standpoint, if they wanted to put their money into stocks which they felt were worth it, these were the stocks. But now it's completely turned. What's your sense?
So again, the fundamental nature of those businesses haven't changed. Till day before yesterday, they had a good management that should continue tomorrow also. Till day before yesterday, they had good business model that should continue tomorrow also. They had the vision and execution capability day before yesterday that should hopefully continue tomorrow also. The question is today's uncertainty and how to price that. The pessimistic scenario is that the world is coming to an end, but that will be far from the truth. The optimistic scenario is that nothing will happen and will come through this. Again, that is not correct. We'll have to keep on looking at the situation, and as situation evolves, we'll have to make judgment. Just to give you a small example, on October 2008, which was a financial crisis, at the bottom, just for one day, Sensex touched 8,000. At that point of time, India's market cap was $510 billion on a GDP of $1,198 billion, roughly about 43%. On Thursday's closing prices, not Fridays, but Thursdays, our market cap to GDP ratio was roughly about 49%. Now, with today's correction, we are probably reaching somewhere near October 2008 low, which was there only for just one day. So from a market cap to GDP point of view, obviously we are becoming nearer to the cheaper level. But the question is, will the GDP be sustained or will there be a correction? Now today, it's very difficult to predict the future. It's very difficult to take a call. Who knows, as we speak, some intelligent mind would discover medical solution for this virus and things will return back to normalcy sooner than currently discounted by the market. Who knows, this lockdowns can continue further and the medical solution which we are looking forward may emerge little later. So we'll have to take a call depending upon situation. For investors, the time-tested formula is asset allocation. This is time to be overweight equity looking at the valuation, but you can't jump in looking at the current situation at one go. You'll have to be investing in bits and pieces. At every level of correction, you'll have to slowly increase your equity risk or your equity allocation.
Nilesh, one final question from my end, and two slightly controversial questions. You can choose to answer any one of those. There is something that a lot of people alluded. I mean, I think in the conversation that we had in the past as well, you mentioned that when we are in 2029 and we look back at 2020, we would think that this dip was an opportunity missed. Would you still hold that conviction? And tactically, is this the time to exercise that conviction, or would you wait for things to settle? The part two, the other question is, there's so much clamor which I somehow disagree with, but I just wanted your opinion, and feel free to answer this, feel free to not to answer this. There's so much of clamor about why shouldn't the market stay shut in a scenario like this, if you have a view there.
So in case of market shutdown, there are pros as well as cons. So far, globally, none of the major markets have been shut. The only one who tried to experiment this, Philippines, had to open and face the brunt of big correction. On the other hand, there are talks about people who will have to move from their houses to the offices or to various places. We'll have banking operating at little lower than normal capacity. So there are pros and cons on both the sides. I think I will let the decision be at the regulator level or exchange authorities level, who will be in a far better position to weigh what's appropriate for the country as well as countrymen. On the first question also, I would like to answer that yes, undoubtedly, I'm in the camp which believes that medical solution will emerge sooner rather than later. Best of the brains of the world are today working to find a solution. We did see in South Korea, they came out with a testing kit which will detect coronavirus in just about 10 minutes. Now, this all shows that some medical professionals are able to detail out or research out this virus far more. And if today they can figure out a testing kit to detect coronavirus in 10 minutes, I'm sure tomorrow they'll be able to find out a medical solution which will last probably for 10 days rather than 10 minutes. But there will be a solution. Second, the damage to the economy is undoubtedly there right now with lockdowns and shut-ins. But at the same time, benefits to economy will flow in as central bank and central government responds to the current situation by way of lower interest rates, higher liquidity, better fiscal stimulus. Will also benefit from lower oil prices, which are prevailing globally today. Will also benefit from lower trade deficit with China, as exports will not be that easy from China as before. So there are positive things to look forward to once we find a medical solution. 2008 was a financial crisis. 2020 is medical plus financial crisis. And hence, the first focus should be on finding a medical cure. Once that is available, we will be able to reconstruct our economy in a much faster manner, just like we did it in 2008.